Hello, chart watchers, and welcome to this Tuesday, February 12th, 2019 Market Watchers Live Show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Well, we've got another pretty good day in the market so far. We got the Dow Jones Industrial Average currently up 345 points, the S&P 500 up 34, the NASDAQ up 100, Russell 2000 up 17, so strength across the board, up at least 1% on all of our major indices. 10-year Treasury yield trying to move back to the upside. It is up 3 basis points to 2.69% today. Volatility continues to drift lower. We are now back down below 16. So last week's scare, toward the end of the week, we got the VIX up to 17.5. We have moved back down below that key 16 level. Materials leading the action to the upside today. The dollar, we'll talk about in just a couple of minutes, but the dollar pulling back from key resistance, and that is enabling materials to lead today. Financials also having a strong day. Real estate, the only sector down today, down almost 1%, but most of it just profit taking. We've had a huge run up in real estate over the past 6 weeks or so. So not surprising to see a little bit of profit taking there. Within the financials, life insurance, you can see trying to make a breakout here above the 760 level. Life insurance having a very strong day today, probably benefiting a little bit from the 10-year Treasury yield being higher. The Dow Jones best stock today, Caterpillar. Caterpillar up more than $4, as you can see, trying to break out above about a 3-week high. And then in the NASDAQ 100, one of the better stocks, Symantec, SYMC. You can see after gapping up with strong earnings, pulled back. Now it's back up trying to challenge that level. I'm watching the 23-24 area on Symantec. I think a breakout above that would be very bullish for the stock. All right, Erin, well, long weekend, an unexpected day off yesterday with bad weather in Seattle. We were unable to host the show, but welcome back. And what do you think about this market?
Yeah, it's pretty interesting. I was looking at the roller coaster ride that seems to be occurring again. As we're up, over 1 1/3% right now. And I know yesterday was kind of an interesting finish to the day.
Yeah, we've had some bifurcated action the last couple of days where the Dow Jones really struggled a little bit while the other indices were trying to make a little bit of headway to the upside. So you can see the Dow just a little bit below the prior high, whereas on the S&P and the NASDAQ and the Russell 2000 were either at those highs or above. So a little bit of underperformance in the Dow just recently, but it seems to be bouncing back today.
Indeed.
Okay, wow. I tell you what, it was kind of strange yesterday not to be doing the show with the market open.
Yes, absolutely was.
A lot to catch up on, but I don't want to spend too much time chit-chatting because I know that we do have a lot to go over. I know you've moved your workshop back to next week so we can cover some things, but I'll let you take it away.
Yes, indeed, I have. So tomorrow we have Rick Bensignor from gosh, where is he from again? I'm having brain problems here today, but he is going to be here tomorrow, Valentine's Day. Just a reminder to all of you, maybe, I guess, to go get that card. And then we have no live shows on Monday, President's Day. The market will be closed. And then, yes, I am moving my workshop to next Tuesday. So you'll want to stay tuned for that. I'm still trying to figure out exactly what I want to do it on, but we'll figure it out by then. All right, for today, though, what's our agenda look like? Well, we didn't get a chance to do Monday setups yesterday, so we're going to do, in quotation, Monday setups, and we'll look at what we did last week. Tom's bringing back the Break It Down segment. We had a lot of positive feedback on that, so he'll be doing that as our second segment. 10 and 10, our very first symbol is going to be Rambus, RMBS, if you want to go take a look at that chart before Tom does. And then we're going to finish off with the sentiment update. So lots to cover. Let's go ahead and get started, Tom.
All right, sounds good. I'm going to go ahead and jump right into the 10-year Treasury yield because we had no economic reports out of substance. Actually, last 2 days, yesterday and today, really not a whole lot out. So bond market kind of trading on its own just based on technicals, which unfortunately not great if you're looking at the yield, which has been going down. Treasuries, of course, Treasury prices going higher. This is problematic still for me, but as long as the equity market remains solid technically, I'm going to stick with it on the long side. But just keep in mind this, the downward move in 10-year Treasury yields is not a good sign for our economy. Normally, if we're expecting the economy to strengthen, we would be seeing these yields rising in anticipation of that strength. So anytime you see it moving down, you got to be at least somewhat cautious on equities. So we'll see how we, whether or not we can continue to hold on the equity side to some key support levels. But as long as we do, again, I would stick with it. Here you can see, though, 10-year Treasury yield is up 3 basis points today, 2.69. We've really struggled to get back up above that 20-day moving average. And you can see throughout the second half of November and throughout the end of the year into the beginning of 2019, we never even touched the 20-day moving average. So we have gotten back up there. We went above it a few days, really struggled to hold it there, though. I don't think we had any consecutive days above the 20-day moving average. And so that would be one thing that I would be looking for the 10-year Treasury yield to start moving higher. And of course, for those of you who maybe aren't as familiar with the Treasury market, when the yields are rising, it means Treasuries are being sold. And when Treasuries are being sold, most of the reasons why folks would get out of Treasuries would be the same reasons that they would get into equities. And so if the Treasury yield starts to rise and gets into a nice uptrend, that generally is a sense of money rotating away from the defensive Treasuries and into the more aggressive equities. And we've already seen the stock market doing well. So imagine if money begins rotating away from the Treasury market. That's something to keep an eye on as well. But I'm always a little bit tentative when I see the 10-year Treasury yield struggling, because I do think the Treasury market tends to get these things right more often than equity. So keep your stops in play on those equity positions, especially if you're playing these short-term bullish signals that we've been getting. All right, let's take a look at some earnings reports. Now, the first two on the list here actually came out yesterday. Restaurant Brands and Lowe's Corp, but because we didn't have the show, I thought I'd point those out. Nice report by Restaurant Brands, stock doing really well. Lowe's Corp, unfortunately, not experiencing the same kind of strength, and stock really got hit yesterday on that news, but has bounced back quite a bit today. And then you can see the rest of these reported either last night or this morning, and across the board, really most of the news was good in terms of earnings. You can see that Welltower, WELL, fell just a little bit short of expectations. After the bell today, another lineup, including Twilio. This has been one of the best performing stocks out there. If there's one stock I would expect a really strong report tonight, it's TWLO. If they were to warn, or if they were to come up short, that's a stock that's really aggressive, because it is based a lot on expectations and future growth. But Twilio will be one to watch because it has been a leader within the software space. All right, let's pull up a couple of these charts. QSR, Restaurant Brands, was the first one that I mentioned. So let me grab that chart and take a look. You can see here, tried to break out yesterday with that earnings news. Got as high as 65 and change. Looked like it was breaking out, and then printed that black candle, and now we're just hesitating. I don't know. I would expect maybe we'll go back down, fill the gap, maybe even go back down to the 20-day moving average. And I would say maybe worst case, a move all the way back down to about 60, 60 and a half to test the top of this gap support. But I do expect QSR, because it is in the restaurants and bars area, which has been extremely strong, really good area within consumer discretionary. I think eventually we're going to get that breakout here on QSR. So pull back into the lower 60s, I think, would be a great reward to risk entry into that area. All right, let's take a look at L. That was the other one that reported yesterday. I said that was down, rebounding quite a bit today. Here was the move down. But when you look at a stock like this, which had not been performing very well on a relative basis, you can see here was the group bouncing back. But look at the stock relative to its peers. Even though the group was coming back pretty strongly, the stock was just kind of going along for the ride. Not a really good look to it. And, of course, with the news, they missed, and the stock got hit pretty hard. A couple of others, FIS reported, and you can see move to the downside. Stock trying to make a breakout here, though. A lot of overhead resistance between 109 and 110. So look for an increase in volume and a breakout above 110. I think that would be bullish. Welltower, I mentioned that they did come up short on their bottom line. They also came up short on their top line, and yet the stock hasn't really moved lower. That, to me, is a stock where I think traders are looking ahead. I don't think they care about the last quarter. I think they still see strength ahead for this stock. And as a result, you've got one of the best stocks in the space here on a relative basis. And the group just recently broke out. and you've got one of the leaders within the group. So sometimes it's a head scratcher when I see a stock miss top line, miss bottom line, and they just reaffirm their guidance going forward. So I would have expected a little bit of a hit. The fact that they didn't hit, probably a good sign for the stock going forward. Shopify, SHOP, did gap down today, hit the 20-day moving average, but this has been a pretty good relative strength stock. You can see off of the December low, this has been one of the leaders within software. And of course, software has bounced back really nicely against the S&P and broken out. So you've got one of the best stocks. I actually like this pullback to the 20-day moving average. I expect we're going to see a breakout with Shopify as we go forward. OMC did miss on their top line, but they beat bottom line. Earnings per share, they did beat Wall Street estimates, but revenues, they fell short. And the stock gapped up at the open, but fell back. It's just kind of in this range. I do think on a relative basis, it's okay. Not going to be one of the best stocks out there, but not too bad. Molson, this is Molson Coors, TAP. Market did not like this report at all. They fell quite a bit short on their revenues, although they did beat the bottom line. Market didn't care. Big volume, gap down, and this is another one on a relative basis. Check out what's been going on. Actually, it looks like on this stock must be pretty closely tied to the index itself, because there's not a lot of movement here. But one thing you can see is the stock has not been a great performer versus the S&P 500, and it is taking another hit today with the earnings. So TAP, unfortunately, at this point, all tapped out. RNG, this is a company now that did beat. They reported last night. They beat on the top line, beat on the bottom line, and gapped higher. It was a relative outperformer within its space heading into the report, and you can see a very strong performer relative to the S&P 500. I am not at all surprised. The stock gapped up $9 at the open today after beating top and bottom line. Twilio, I'm just going to bring this one up because they do report tonight. I want to show you the chart. Very, very strong action here. Software has not broken out yet, but you can see Twilio, and this has been one of the best software stocks. So I would be keeping a close eye on this report tonight. I suspect they're going to have good numbers. Are they going to be good enough? I don't know. We'll have to wait and see. A couple other things before we head into the upgrades and downgrades. I did want to mention that the U.S. dollar has been very strong. The proxy, which is the UUP, you can see up here challenging the high we saw in December. We're backing off of it a little bit. Look at the move that we have made in the UUP. We had 8 consecutive gains heading into today. We are pulling back a little bit so far today. We'll see whether or not that has any impact on key areas of the market, materials being one of them. While we've been rallying in the dollar, you can see over the last 8 days, materials have been struggling. So the market's moving higher, materials lagging, though, because of a stronger dollar. But today, getting a little bit of a boost because of the weak dollar. And then the last thing I want to mention is gold. Let's pull up the, actually, I'll just pull up the gold chart. Do have on the last high, higher prices, lower PPO, negative divergence. So watch 121 to the downside. That's your 50-day. That's your recent price support. If we fail to hold the 20, I think we're going to go down to 121. And the last comment on the weekly chart, we want to be careful because the 20-week moving average, which I think is going to be an important area or an important moving average to watch on gold, is at 120 and climbing. So if we were to go back below that price support level at 121 and also fail to hold this rising 20-week moving average, and that the dollar breaks out all at the same time, I would be out of gold. So I'm okay with gold right now, short term. Long term, I think the dollar remains in an uptrend, which could be very bad for gold. So short term, gold is okay. Longer term or more intermediate term, watch 120, 121 on GLD. All right, Erin, upgrades, downgrades. What do you got for today?
All right, let's get it started. There actually weren't that many, so I'll be going over a lot of the ones that really were today, and usually I have a whole handful to go through, but there weren't that many today, actually. So we'll start off with our upgrades. B of A Merrill upgraded Evergy from a neutral to a buy, and actually has moved its target to $62. So they're expecting to see it move above, obviously, the overhead resistance at 61. Definitely like the way this chart is shaping up as far as decision point analysis goes. We've got the PMO buy signal that came in about mid-January. a very clean signal. It came straight on through. We didn't get a lot of, whipsaw to the signal, so I always like to see that. Nice rounded bottom on it. And of course, this breakout above that top we had in mid-January, which I also like. The only thing I would say that isn't, that great here is that it is at the top back here from early September as far as resistance goes, but I would be paying more attention to the shorter term overhead resistance at that $61 level. So it's up a little over 1.25%. This one might be worth a watch list. That's what I would be looking at there. TriNet Group was upgraded today by William Blair from a market perform to an outperform. And market, certainly investors like this. We can see that nice gap up above the 200-day EMA, which has been posing as looks like difficult overhead resistance here for a while, considering we've had such a nice run. So we took that pause and now we've gapped up above the 200-day EMA. I think that's a really good look as far as the chart goes. Of course, with the gap up, we are looking at a move that is, over 4.5%. So again, I would consider a watch list on this. I wouldn't want to chase it out, but it actually looks pretty darn good here. All right, next one up, Cisco. Now we're going into some downgrades here. Cisco was downgraded today by Morgan Stanley from an overweight to an equal weight. So we're not going into sell mode here as far as their guidance, but we are seeing a problem here with the downgrade from the overweight to the equal weight. And, right now it doesn't look too bad because you have this breakout here that we had a short-term breakout. And we're hitting some pretty important overhead resistance, I would say, especially when you get up here close to $49 range. But the PMO is still looking pretty good. You can see that it had tried to top, but it has turned back up above that signal line. Look at the volume for the OBV. It's just been really out there supporting this rally as the volume OBV moves higher, as does price. So I think that looks pretty good as well. So we got the little breakout. So despite the downgrade, and again, it was downgraded to a equal weight, not, a sell. So not horrible there for Cisco. All right, Fastenal was also downgraded today. This one was downgraded by KeyBank from an overweight to a sector weight. And, I like the look of this chart in that we have that PMO bottom that is above the signal line. But I have to say it looks very overbought right now. We are making some new highs. It's up 1.33%. Interesting that we're seeing this kind of market action on a downgrade. So interesting on that, but I have to say I'd be a little concerned about this PMO being so overbought. I would expect to see a little bit of a pullback here on Fastenal. Next one downgraded. This Gilead was downgraded actually by 4 different groups, or 3 different groups. We had Raymond James, Citibank, and Wells Fargo, all 3 downgraded from a buy to a neutral position. Market does not like this huge gap down. We're now down over 4 2/3% currently. PMO sell signal had actually come in earlier. So we did have a little bit of warning that things were going south. And as you can see, that 20 had turned down above the 50. We got today we're looking at a sell signal on the intermediate term trend model as that 20 is below the 50 currently. Nothing good about this chart. I don't think it's worth a watch list even at this point. I would be looking for a move all the way down to that $60 range. All right. Oh, and Gilead, the reason why is they had a failed drug that came out and the test results weren't what they wanted. And so the market and all of these agencies decided to downgrade it. All right. Varonis Systems was also downgraded today. It was downgraded by 4 different agencies: JMP Securities, Stifel, Benchmark, and Craig Hallam, all downgraded Varonis Systems. But they moved it from like the market outperform to a market perform, the buy to a neutral. So we're looking at neutrals, not necessarily sells, as far as the downgrades go. Really interesting price movement today. As you can see, we got all the way down to this support level, just below $50. And now it looks like it's coming back up toward the top of that range. I still don't like it. You have the PMO turning down, obviously, on a big move like this to the downside, but I think I agree with that downgrade. We did touch that support level, and it looks like we're coming back up, but that 50 is well below the 200. The 20-day EMA, 50-day EMA, especially, has been overhead resistance that we've had trouble with. So that's something to keep an eye on there. And that's all I had for upgrades and downgrades. A few extras that came in that I didn't go over. We had PBR was upgraded. Rio Tinto was upgraded today. And then a couple extra downgrades. Crown Castle, CCI, and Gold Corp were also downgraded today. That's all I got. Time for Monday setups. So I will get that ready to go. We got to look at some what happened last week. Although I know I'd prefer to forget about last week. But let's see. So we had, for me, it was EV, I think it was EXTN. Let me get back to my papers here. Okay, there we go. Yeah, so I had EXTN. I'll go ahead and punch that in.
Make sure you grab the screen, Erin.
Oh, yeah, thank you. All righty. Perfect. So now I have the chart ready to go. Here we are. All right, so like I said, I certainly would have liked a little bit better performance here, but it looks like we're going to pick up some of the losses. Now, I have to say that when I did give this pick, I did have a stop set at 16.15, so we would have gotten stopped out. I thought I'd set it low enough that that wouldn't be a problem, but clearly it was. Making up some ground today, up almost 1 3/4, but I think I came in at 17.76, so that was not a good pick for last week. It is what it is. And you had Loco at 16.19.
Apparently, I was Loco when I picked it.
Yeah, I know a lot of people were interested in following that one too when we were doing 10 and 10. That was coming up a lot, so a lot of interest there. It looks like it's now found a bottom, just like mine. So
I do like, the overall chart still looks pretty good to me, still fairly constructive. It looked like as the stock was going down, the volume was drifting much lower early in February. So I suspect that the overall trend to the upside in restaurants and bars will lift this one higher. And I do like the fact that the last 2 days now we have higher highs and higher lows, even though we are near the low of the day today. So there is hope here. I'd want to see it close back above that 20-day moving average, though. That's what would maybe encourage me to take another shot with it. But again, I do like the restaurants and bars group. I'll talk about that later in the Break It Down segment. But yeah, Loco, very disappointing. Couldn't hold on to that 50-day moving average. I got stopped out of it as a result, and we'll see, whether or not it can climb back up or not.
There you go. All right, time to clear that slate. I'm happy to get rid of that one. Let's move forward here. Hopefully we've got some good stuff coming up. So here are the ones that I have. I'll go over the ones I didn't pick. Honestly, I thought it was slim pickings today. Personally, if I did trade short term, I don't think I'd be getting into anything. I wasn't really impressed with the charts that much, but I did find a few interesting ones. 8x8, I really liked this chart, but for a Monday setup, it was already up well over 2.5%, and I just didn't want to take that in when I really was expecting to see a bit of a pullback here. You can see that the 5, 20, and 50-day EMAs are all converging here. We should end up with a short-term and an intermediate-term trend model buy signal at the end of the day. So I think that's great. And of course, that PMO, love to see those little, those rounded bottoms, that really undulating move to the upside, not really, jerky and moving back and forth a lot. We're getting a pretty clear momentum signal here to the upside. Haven't actually gotten the buy signal yet, but that's usually where I like to consider getting in. So I would watch. We got that penetration. We got the breakout above that 200-day EMA. So I would be looking for a move. I would look for a bit of a pullback. I think this one would be worth the watch list. given the price, and I don't see overhead resistance until we get up here to that $20.50 level. So I think, you could get a decent move out of here, a couple of percentage points. That would be nice. But I would definitely want to wait until we got the pullback. So that was the reason I didn't pick 8x8, but I thought that one looked pretty good. Illumina actually is on my list. And it is a biotech, so just, hold on for the ride if it does what it's supposed to do. But in the short term, I really like this formation. It looks like a ascending triangle. That's a bullish formation. We just got the breakout. If you did looked at the measurements here for a target, you look at the backside here and determine the distance, which is, it looks like about 15, maybe 20 to the upside. So you could make that move to here, and I would be looking for a 315 move to the top. Now, the only thing I would warn here is, that 50 is getting ready to cross below the 200, and that would put it in a long-term bear configuration, but we're so close. I suspect we're going to overcome that just based on looking at the momentum here as far as the PMO goes. And let's see, Quantarex was another. And this one, I thought it was interesting. It's not textbook double bottom here, but it is rounded. It still looks pretty good. You've had this trading channel here. Looks like this is the top, though, of a shorter term trading channel. So there is still some overhead resistance to overcome here. Another reason I didn't pick it. But if you wanted to go with, the non-textbook double bottom here, that's a pretty sizable move to the upside if we were going to get the upside target, which would be, goodness, it's at least a $4 move, I would say, to the upside from here. So something to keep in mind. You've got the PMO buy signal. I think that looks good as well. Wave Life Sciences, another one in the healthcare biotech area. I had a lot of those come up today. So, we're seeing some improvement as far as momentum goes, or they wouldn't really be showing up like they are on my radar and my scans. So I thought that was interesting. So having a couple biotechs in here, that's really the reason why. Right now we're in the middle of this trading range on Wave Life. So, I like the chart. It came up. You've got the rising bottoms. Notice that rising bottoms and on the price. And, the PMO bottoms are rather flat, but we're not looking at a negative divergence here by any stretch of the imagination. Not thrilled with the scooter. Like I said, this one, it made my list, but certainly less excited about this one than the others. And then the one I ended up going with today was Brady Corp. And this one's in technology, which I'm not particularly bullish on, but I'm bullish on this chart. I really like it. You've got the PMO buy signal has just come in. Nice breakout, a short-term breakout from the top we had back in January. Granted, there's still that intraday high that we saw back in September that needs to be overcome. But as you can see, we actually did trade above it. We're not currently trading above it, but I like the setup. And honestly, if it comes back a little bit lower on the day, that wouldn't bother me. That actually would set me up, I think, for a nice move to the upside. But, look at the OBV, made a nice move, of course, on that big volume move to the upside. And then, of course, the scooter looks pretty good. All right, Tom. So those were mine. So BRC, and I guess, at this one I have 46.91 the last time I looked at it, but it is at 46.84, and I'll take that extra 7 cents. Thank you very much.
Take whatever you can get, right?
Exactly. Let's get it started, hopefully on a win there.
That always feels good when I go to buy a stock and I'm looking at it. I go into my account to buy it, and by the time I get there, it's a little cheaper.
Exactly.
Just going to save a little bit of money. All right, let me take a look at some of the stocks. Now, I actually did this in my blog article yesterday because I always provide my Monday setup in my blog article on Monday. So this was the one I put in there. It has risen some off of the Friday close, so I just have to I'm going to go with it anyway. But I'm going to go with Bank of America. So this is going to be my stock. And if you take a look at the chart right now, it is currently trading at $28.69. So $28.69 will be the pick. What I liked about it, And of course, yesterday's action and today's action was not on here. I was looking at this hammer from Friday where we had gone down to this 20, I think it was 27.86. Here was your earnings. Big move up. I really like what Bank of America is doing on a relative basis, relative to the banking group. And what I'm also counting on somewhat is that the 10-year Treasury yield is going to begin to play some catch up with what the stock market is telling me. Now, if it's normally I don't look at it that way, and I usually expect that the stock market's going to play catch up with the bond market. And if that's the case, I would keep a stop in below these tails. So I think 27.86 was the low. I have a stop in that's just a little bit below that on an intraday basis. So I'm not going to take any chances because the market, if it rolls over, I don't want to be caught in long positions and holding them. But so far, I think this is holding up really well. And if the 10-year Treasury yield keeps moving up, we've seen the last couple of days some relief in the 10-year Treasury yield, and you can see what it's doing to Bank of America, already moving higher. I'm banking on it, no pun intended, going higher, the yield going higher, and the stock going higher. I think we're going to break out above that 29.60 area and eventually make a move back for what we saw in the third quarter, some of the highs back earlier in 2018. So I think Bank of America sets up pretty nicely. And again, I do like it on a relative basis. So let me pull up that relative chart and just show you that. So here's the bank index, which overall hasn't been great, I'll be honest. But on a relative basis with earnings, look at the relative highs that came in around 0.635 to 0.64. I'm looking at these numbers over here on the right. So that's just Bank of America's price divided by the bank index value. And you can see the breakout there. We've been pulling back, but I think that creates an opportunity. So I think pulling back and testing the 20-day moving average and gap support, good entry. I do own Bank of America right now, so just full disclosure there. But I'll go ahead and go with Bank of America for this week. But some others that I will throw out there as well that I think at least are worth taking a look at. And again, I put this list together yesterday, so some of these stocks are doing pretty well because the overall market is doing so well. But Meritor came out with strong earnings. You can see the gap up. Pulled back, held the $20 level. You can see the prior high was at 20. Went down yesterday and hit the rising 20-day moving average, which was just below $20 and now bouncing nicely. I think it's going to go back up, test this 22 level, and eventually break out. Let's see. Next one up, ATKR. I may have mentioned this one in Turning Point last week when it had pulled back and it hit this 20-day moving average. So I really like this one. I'm in this one. I own it. Getting a nice little bounce so far, but I'm looking for a move back up potentially to test that 25, maybe even above 25 area. Close above 24 would be short-term bullish. I don't know how long I'll hold this one. If it gets to 24, depending on the volume, if it's light volume, I may exit there just for a quick little trade. But ATKR bouncing off the 20 looks interesting. SYK, this one is more of a longer-term play in my opinion. First of all, it's in the medical equipment space. And when we go down here, look at medical equipment relative to the S&P. So if I find a stock that I like, and it's in a group that's been outperforming the S&P 500, so it's already getting its fair share of money, and then you give me a stock that maybe with earnings can break out above sideways consolidation, this is a stock I think that can run to the upside. Take a look on more of a weekly chart on Stryker. You can see this sideways consolidation throughout 2018. And with earnings, we broke out above it. Look at the weekly PPO just starting to strengthen just above the center line. So I think this one could run for a while. I like this one more than just a short-term pick. But the best entry would be probably down below 180 level, somewhere mid-170s up to around 180. I don't know if it goes back down there, but that to me would be the best reward to risk. Let's see, what else do we have here? A few more. Let's take a look at INFY. All right, INFY, a breakout here above these prior highs, but the group is not breaking out. So what do you have? A strong stock within the group, pulling back on a relative basis, but it was a little profit taking. Look at the volume shrinking as it's been pulling back a bit. So yeah, it's not really keeping up with the market move to the upside, but I think again some profit taking is certainly warranted here. SYMC, this is another one I'm watching really closely, because I think a breakout above 23.5, 24 would be extremely bullish for the stock. Here was the earnings report where it did make a big move to the upside. Now, software obviously has been one of the stronger areas. This stock has not been a great performer, but what I'm watching to see is can we clear a relative resistance area. And if we can, at the same time, we're getting a price breakout on the absolute chart. SYMC could be interesting. So I'm not ready to jump in just yet, but this is one I've got on my radar for sure. Last two, OSK. This is Oshkosh. And definitely this breaking out. First of all, you got the gap up with earnings, heavy volume. We pull back, fill the gap, and now we're breaking out again in a group that has not been very strong, as you can see. So you have got one of the better stocks within the space. Volume trends look good. I think this breakout is going to lead to more gains. And then the last one I have is Decker's, DECK. And Decker's gapped up with earnings early February, pulled back a little bit. I'm seeing a little bit of a cup here. Failure earlier today to break out, so maybe we get one more pullback. If we got anywhere close to that 137, 138 area with the 20-day coming up from underneath, I think Decker's would be nice. All right, let's go ahead and summarize. So I went with Bank of America for this week. And, of course, from today, we only have 4 days, so it'll be a shortened week for our setups. But I'm going to go with Bank of America, 28.69. Erin's got Brady Corp, 46.84. I think you picked it because of the Super Bowl.
Actually, it's interesting. Somebody had asked for it for the 10 and 10, and I ended up picking it. I thought that was pretty funny. They mentioned that it came up in my scan. And EGHT, that was actually the first request today. And honestly, I hadn't even looked at, obviously, we prepare these before the show, so I thought that was interesting too. Happy to know that people out there are using my scans.
Yeah, I would have thought, with the whole Brady thing, that you're just thinking, hey, Brady always wins. So
yeah, it's true. I suppose he does. I'm such not a fan of his. I almost didn't pick it because it had his name in it. But
if you projected it to go up 12%, that would have been just a little too much. Of course, that's his number on it.
Right.
But anyway, all right, let's keep moving on because I know we got a lot going on. I do want to remind everybody that we got a poll running, and just like last week or week before, whenever we did the break it down segment, I provided some stocks within the industry groups that I was looking at in the industrials. I know there was Boeing, TransDigm, some others. So we're going to do the same thing today. So these are three industry groups within Consumer Discretionary. That's where the stocks come from that are in the poll today. And so just take a look, and if you had to own one of these, which one would it be? Kind of a thing, just for fun. And we'll talk about it at the end of this segment. All right, so let's take a look at the consumer discretionary space this time. So I'm going to start with the XLY and just show you an absolute chart. Obviously, it was going up till the September-October swoon when the overall market got hit. We pulled back, but we have climbed back up above the 20-week moving average. We've got overhead resistance in the market. When you sell off like we did for 3 months, as hard as we did, there are going to be multiple levels that you have to stair-step to get through to break back out to all-time highs. It's not just going to happen at once. Although, it seems like we have rallied quite a bit off of those lows. We took out some key price resistance levels, 20-week moving average, 50-week moving average. Well, next up on for the XLY is going to be this 110 area. We'll have to see if we can get through. It's not a slam dunk, that's for sure. All right, let's keep going here. Let's take a look at the relative strength. Now, this is why I like consumer discretionary. Number one, if I'm going to try to beat the S&P 500, I need an area of the market that is outperforming the S&P 500. And as long as I feel I'm in a group that's going to outperform, it makes it easier for me to find stocks within that sector that can achieve my goal of outperforming the S&P 500. Now, some of you might have goals of trying to achieve X percent per month. And while all of those types of goals are fine, some of it is somewhat dependent on what the market's doing. If the market's going down, it's going to be much more difficult to achieve a 2% a month or a 5% a month or something like that if you have really lofty goals. When the market's strong, it's going to make it a lot easier. But for me, it's just about outperforming the S&P 500. So if the S&P is going down and I can somehow be break even, I'm happy. I don't have to make money. To me, I'm increasing my purchasing power. Well, when the market's going up, and I think we're in a secular bull market, I believe we're going to go higher later in 2019. I think we're going to break out the all-time highs later this year, if not this year, next. But I expect that we're going to go higher. So how do I outperform the S&P 500? Well, the first thing is recognizing when a group on a relative basis is consolidating and then making a breakout. Take a look back in 2009. We had a nice rally in discretionary stocks versus the S&P, pulled back, tested that area of resistance, pulled back, tested it, pulled back, and then broke out. When you get these relative breakouts, you can see some really nice outperformance for a period of time. Same thing happened 2010 into 2011. We break out, make another run. Same thing, little sideways consolidation, another run. Now, this one was a little deeper selling. 2014, Consumer Discretionary took a back seat to other areas of the market. And while it was going sideways, this was an area that would have been very difficult to beat the S&P. But check what happens when it breaks out above that prior relative high. We then lead for another 6 to 8 months. Then look at this. This was an extremely lengthy consolidation period where we could not move to a new high. When we finally broke out in 2018, though, you can see the first half of last year was very strong. Many retailers did well. Restaurants and bars really picked it up the second half of the year, and some other areas. But look at the triple top right here. I'm waiting for this breakout because if we get this breakout, I want to be in consumer discretionary stocks. So knowing that, where do we go? Well, let's take a look at the RRG. Now on the RRG, I just want to show you first, here is the XLY as the benchmark, and I've put in all of the industry groups in the consumer discretionary area into an RRG so that you can kind of see. We can go back and just have fun here and just look at how the groups are doing on a relative basis. So this middle part is the XLY, and this is just kind of how they're rotating. As they're moving up above this horizontal line, it means that they're gaining momentum. Once they get across this vertical line over onto the right-hand side, it means that they're showing relative strength. So what you want to see are stocks or groups that are moving through the improving into the leading, and when they do weaken, they turn and they go right back up into leading again. That's the beauty of the RRG. And we've had Julius de Kempenaar, who is the creator of the RRG. Always a great session when he comes on here and explains how he uses his RRG charts. But you can kind of see how the rotation takes place around the benchmark XLY. Now, if the XLY breaks out, what you want is to own stocks that essentially take up residence on the right-hand side of this chart that are showing relative strength. A lot of times they will show relative weakening for a period of time, but they're still on the right side of this vertical line, and they turn around and they go right back up again. So as we take a look at, say, I'm going to pull up the restaurants individual lines. Let me find that one right there. Okay, so let's go all the way back to the beginning of the year, and let's just take a look at the restaurant group. So here is how restaurants have done over the course of the last year relative to the XLY. So through the first half of the year, it wasn't very good. But as we started getting later into the third quarter, look at the acceleration begin on restaurants and bars. Check out how it breaks out versus other areas. That's important to know because restaurants are getting more of the money that is rotating into consumer discretionary. So if consumer discretionary all of a sudden starts to get more money than the other sectors, you want to be looking in areas that are outperforming the XLY. So look at how far to the right the restaurants and bars gets. It's way out here past 110. Nothing else is even close. So restaurants and bars were by far the best group. Now, it's weakening, but it is still further to the right than any of these other groups. It's still showing relative strength. So while it's weakening, this is actually a time to think about being in this group. So I think restaurants and bars are one of the three industry groups that I want to talk about today and look at individual stocks within. Let's take a look at the specialty retailers. Specialty retailers, let me find them on here. Here we go. And let's go back to the start of the year and see what's going on here. Now, specialty retailers, earlier in the year and throughout the big move to the upside in the market, stayed on the right-hand side. But when we got to the top and we started to weaken, you can see the group struggled on a relative basis. It's now on the left side of this vertical line, and it's under the horizontal line. It's in the lagging area, and pretty close to the center, though. The ones that are really bad are the ones that are way out here to the left, just like restaurants were the best one way out here to the right. So watch specialty retailers. It continues to weaken, but look at what's going on now as we bottom in December and we start moving up into the beginning of 2019. Look at the specialty retailers beginning to move. Now, another thing I want to show you is I want to go over here and show you the seasonality chart on the specialty retailers. Because as you head into March, it's the best month of the year for specialty retailers. So seasonality is telling us over the last 20 years, this group has averaged going up 3.5% in March. And it's gone up in March 84% of the time. And it's followed up with a pretty good April as well. So seasonality also on our side as we look at a group that is beginning to improve technically. So if the XLY breaks out on a relative basis, here is one of the strongest areas, one of the fastest improving areas, the DJUSRS specialty retailers. All right, and then the final one that I want to point out is footwear. So here's the footwear. Let's take a look at the footwear from the beginning. And once again, you can see during this rally, footwear very strong on the right side of the chart, always on the right side. So you've got relative strength. And then we started to pull back when the market was weak. You can see starting to go in left of this vertical line into the lagging area just briefly. And then look at what happens when we strengthen. Footwear, once again, starts to regain its leadership. So these are the three that I want to focus on in terms of finding individual stocks. Now, if you weren't here for last week when I did the industrials, the next step that I wanted to do is to go into the dashboard. And what you can do is once you find groups that you like, I like to go into the scooter reports and start with the large caps and type in footwear. And you can see Nike, the only one in large cap stocks. It's got a scooter of 84. Looks pretty good. I mean, I don't have the chart up, but you can see not a bad looking chart when you go into that little mini chart. But let's take a look at the mid cap footwear stocks and SKX, Skechers, 94.6. And Skechers just came out with a huge move after its earnings report. And just to go back and show you one other thing here, if we go in and take a look at the seasonality on the SKX. So Skechers, let's go back 20 years. Look at Skechers in January, February, March, and April. Very, very strong. Look at the outperformance here. It averages over 30% a year just in these 4 months. Well, we're in February, just had a great report, just broke out. So Skechers is certainly one to keep an eye on, right? Let's go back and take a look at small cap. And right on the top, look at Deckers, 94.6, Crocs, 94.6. Crocs I'm actually waiting on a breakout above the 20-day. It's one that I like. It's just been underperforming recently, so I'm waiting to see it regain its legs. But Deckers I thought looked really good with this big move up. I mentioned earlier, here's that little cup. False breakout so far today. Maybe we get a little handle. Closer we get to the 20-day, I think this one looks pretty good. And then going back to that scooter, let's take a look at the where is it? All right, let's take a look at the restaurants and bars. So you can just type in restaurants. And here's the large cap stocks. There's Chipotle. And of course, Chipotle, when you look at the chart, here was the earnings report. Big, big gap up. Really strong looking stock right now, I think. Starbucks also, same thing. Really, really good action. Big gap up back in November. Sideways consolidation just recently broke out again. Trading very well. And then there is, let's see, do I have any others? Yeah, let's go in and take a look. I don't remember if it's mid cap or small cap. Actually, it's small cap. And you can see Wingstop and Denny's. Here is your Wingstop. Look at this double top. Break above 72, Wingstop would be very, very strong action. Sideways consolidation. We like to see breakouts out of sideways consolidation. And then Denny's is the other. Same thing. Look at the tops here. Trying to make a breakout, couldn't quite do it. Denny's, I think, is another one to keep a really close eye on. A breakout would be bullish there. And then the last one is the specialty retailers. So let me pull up the specialty retailers on the scooters. And you can see here, Alta. These are all just ranked in scooter order. So once you have the area, once you like the sector, and then you take those RRGs, you find out which industry group is, looks really strong, and then look for the high scooter ranking stocks within those areas. And I think it's a great way to trade the market. So ULTA, obviously coming off of the December low, nice test of the 20-day moving average, continues to move higher. Probably just a matter of time before we get the breakout there. Going back and looking at Tractor Supply, here's another one I think that looks pretty good. Big move to the upside, needs to clear 97, but another one really strong, very strong scooter score. And then let's take a look at Flowers, 1-800-Flowers, which I don't know if I think that might be small cap, yeah. 1-800-Flowers, which has been a great one with its earnings recently. And then Five Below was another one. So pull that one up in 5. So you can see Flowers, nice move up, little flag, trying to make another breakout. Very strong stock, great volume. And then 5, look at it, 135 is a breakout. It's getting right up there. Negative divergence at resistance. I might hold off a little bit. This is another one, looks pretty good. So that was a quick rundown, a quick break it down of the consumer discretionary space. You can see on your screen the summary, some of the things I just went over, and show you how, again, you can marry the different tools at stock charts. I mean, taking a look at the relative strength of the XLY versus the SPX, using that colon and a line chart to be able to show you that, and then to then be able to take the RRG, show you the relative ratios and how the groups are performing relative to a benchmark, then finding those relative strength, and then finding individual stocks within the space using Scooter Report. So a lot of different ways to combine all the tools here at Stock Charts, powerful tools to help you with your trading as you go forward. All right, let's go ahead and pull up the poll. And I tell you, this is a tough one because obviously I like all these. They're all high scooter scores. Starbucks is one of the big names, so I'm not surprised that it's up there as well as Nike. But I don't know. Did you have a chance to take a look, Erin? Did you have a favorite?
I did. I actually looked at all of these charts, and for me, technically, Starbucks actually did look the best. So big name or not, I thought that one had the most potential.
Yeah, all of these, obviously, I just picked them to put them into the polls. Them all, obviously. Which one do I like the best? I think I like Flowers, 1-800-Flowers, the best of all of them. I do know it's a little overbought, and we could get a short-term pullback as much as 10%, I would even say, because it made such a huge run. But I'm not sure it's going to come back anytime soon. We'll see.
Yeah.
Anytime I get a stock, though, that sideways consolidates for a period of time, like 1-800-Flowers has, I mean, if you pull up like a 1-year chart or a 2-year chart and just show all the sideways consolidation throughout 2018, and then you get a massive volume breakout, that to me is unmistakable accumulation. So I like them all. I really like Chipotle too. I like the two on the bottom as well as any. And I do own Starbucks right now, so I have that one as well.
Yeah, like I said, I looked at the charts. For me, 1-800-Flowers, that was sort of my first one, just just seeing it, the list. I didn't know all of the charts, but honestly, I couldn't pick Flowers just because it is, for me, the PMO is just super overbought. I just, as far as my analysis process, I couldn't do that one.
I get it. Yeah. Yep, I wouldn't blame anyone for staying away from it. I mean, RSI right now is at 80. I wouldn't be buying it at this point. It's right up against the resistance, and you got it at, RSI 80 and your PMO, like you said, up near 10. That's a really high level that it hasn't seen in probably for quite a long time. On balance volume there looks pretty good, and obviously the scooter's strong. So maybe a little pullback would be better, but I do like the stock going out of the next few months.
Yeah. All right. Time to move on to the 10 and 10. We had a pretty large amount of requests. I thought that the RRG looked very excellent today because, again, you guys, it's really interesting when you do your choices for us to look at. Today, I thought there were really, as far as the RRG, I thought most all of these looked really good, except for maybe the BGS and AMED. But everybody else is either in the leading category or moving northeast. So I thought that was interesting.
I actually like those weakening stocks better than I like the ones that are going straight up that haven't reached the 100 level. I mean, AMED, BGS, the fact that they've been leading and they're just pulling back to me could be presenting an opportunity. The ones on the far left, especially the ones way over to the left, like PYX, ATVI, XPO, their momentum is building, but they've been relative laggards. That's what that chart is telling me. So they could just be getting temporary moves back before they roll back over again. So you got to be careful.
Yes, indeed. I know Julius does. He watches them go into weakening, and then when they start turning back, that's when he starts to get very interested.
Yeah, you've got one in the green there, Erin. I didn't mean to interrupt you again, but the one right on the line, right, come down just a little bit to the left.
Let me get really close here.
Yeah, it's the one right sitting almost on the center of both lines right now. It's back from lagging up, and it's heading back. Yeah, right there. That one looks kind of interesting. I'm sure that Julius would be interested in that one. I don't know which one it is.
Yeah, looks like it might be PayPal. Nope, that's up there. All right, well, let's get going. We got a lot of these to go through for sure with the 10. The first one, though, is going to be RMBS. The second one will be the most popular one in the chat room. So go in there and like, if you are watching live, the different symbols, and then we'll see which one wins.
Yep, I like Rambus. You know, it hasn't been a great performer. Let me kind of clarify that. I think that it's beginning to show some bullish characteristics. After trending lower for quite some time, I think that is an exhaustive gap. Big volume, all of a sudden, huge volume gap down, red hollow candle. So after gapping down, everybody's decided they can't take the pain anymore. It gaps down. And then look at the three white soldiers, which is 3 hollow candles in a row. That generally is a sign of pretty good accumulation. The volume all 3 days pretty solid. We go back down, we put in a double bottom, we retest. I think that reversal right there with volume increasing is a pretty good sign. And then we go back up and we clear the reaction high, which I think is bullish. So I think if you get a pullback, somewhere 930, 940 to me would be the best entry, because then you can manage your risk a little bit better to the downside. You could even wait and see, maybe it'll go down to that 20-day just below price support. But I'm going to say 920 to 940 area is where I would look for a pretty good entry, reward to risk entry into Rambus. Now, it is somewhat volatile. It's a smaller stock, so keep that in mind. But I do like what's going on here on the chart. I think that there's a change of character that is taking place here, going from bearish to bullish.
All right. Okay, the most popular in the chat room is PayPal.
All right, PayPal, like what's going on here, made a new high back just a couple of weeks ago, taking out the highs back in September. I think that was bullish. Pulled back, went a little bit below the 20, which would have made me nervous, but we climbed right back up, and we've been holding the 20 on the close ever since, nearing resistance. So for me, as a short-term trader, I would be a seller at resistance. So I think today's high really was right at about the key level. It doesn't mean I would just wash my hands of the stock. I would just take my profits and wait for either a 20-day test or a breakout to re-enter the stock. So I like PayPal, but the fact that it is up against resistance tells me maybe to ring the register and look for another entry at some point in the future.
Okay, let's see. Also popular, and actually would have beaten out PayPal, ISRG. It just got a bunch of likes at the end here, so.
I think it's pretty obvious that it's nearing some major overhead resistance. I mean, when you take a look at that December high and then just this last January high, and you go through here, look at how many times we've topped in this, I'm going to call it 540 to 550 area, and right now we're at 541. I expect with the overall market that we're going to break out. I do like, now I know some of you, I know Erin, you've talked about this, you don't follow the inverse head and shoulder, but it does look like to me that's what we have here. It's kind of like a bottoming head and shoulder pattern, except that it comes after an uptrend, which I call an inverse head and shoulder. But from the top, here's your left shoulder, neckline, head, right side of the neckline, right shoulder. A breakout above 550, especially with increasing volume, I think could measure up, excuse me, another 120 points, which would be from the neckline down to the head. So this is one that's got my attention to watch it. I wouldn't be jumping in just yet, though.
Okay. Let's see, next one I'm going to give to you is going to be, where did it go? Let's go with Activision Blizzard, ATVI.
All right, ATVI, the group has been getting hit pretty bad. I know Electronic Arts was getting hit, and then all of a sudden that one exploded the last few days. But ATVI and Take-Two Interactive both have been hit pretty hard, and they look somewhat similar in that they have broken down below prior lows. And think about what kind of market we've been in for the last 6 weeks. And yet this stock is going in the wrong direction on heavy volume. I can't really support a stock like this that's performing so badly in a market that has been so strong. Obviously, even the rising tide of the market can't lift this boat. So I am going to pass on ATVI. I don't like it. I think it's too early to try and catch a bottom here. Too much volume there.
All righty. Consumer Discretionary, specialty retailer, Bed Bath & Beyond, BBBY.
All right. We just talked about the specialty retailers. So let's pull up this on a relative chart, see how it's doing versus its group. Well, you can see that the specialty retailers are not too far from breaking out. Best Buy continues to drop. So on a relative basis, you do not have one of the stronger stocks in this space. As I mentioned on the scooter, when I went through and looked at the scooter in this area, you've got stocks like 1-800-Flowers, Five Below, Alta, Tractor Supply. Those are the kinds of stocks that I would be interested in looking at this. Now, having said all that, we could be looking at a change of character on Bed Bath & Beyond with the huge move up, heavy volume. We took out the gap, this gap resistance, and we're holding the rising 20-day, moving higher. So I would just simply say this. If you're in, it's beginning to show at least that it wants to go along for the ride to the upside. So as long as this stays at least flat or rises and we hold the rising 20-day moving average, then I would be okay holding this one because I do like the space. But I don't think at this point it's one of the best. And if it does break down below some key area, I think I would take that money and move it into another area within these specialty retailers.
Okay, let's see. OSIS, and that is electronic equipment, OSI systems.
Yeah, I've got this one on my list. I'm waiting for, I'm almost getting it. I really like this stock down below 85. So today's low is 85.50. I had not seen that yet. But this is one I think that is going to turn back to the upside. You can see on a relative basis, nice breakout here versus its peers. Beautiful breakout versus the S&P 500. And its peers have been leading this rally throughout the last 8 weeks or so, 7-8 weeks. So you've got an improving group and one of the best stocks within the group, and you're getting some profit taking back to key support. So I actually would be okay beginning to nibble on this one and continuing to add on weakness. I don't own it yet, but I think that 84.50 area is going to be important. And then the tail after the gap up, this is where it was selling intraday. At low is where buyers came back in. So to me, that becomes a very important support. When I get a tail on this kind of volume, that's telling me that's going to be a pretty big area of support. So let's just say 82 to 85 area. You got the 20-day moving average coming in there in between. I like the stock. Great volume trends with its earnings report, which beat top and bottom line. Just got to wait and see if you can get it at the best possible entry.
All right. Consumer staples, one of our two that were requested, B&G Foods, which is BGS.
Okay, BGS. It's down at key support. A lot of relative weakness here off of that December bottom in the market. So as the market bounced, and the stock was wasn't exactly flying, but it was doing pretty well in December while the rest of the market was struggling, which makes sense. Being a food company, it's more of a defensive group. And as the market moves up, these defensive stocks lag. So all of this makes some pretty good sense. I would just say if it loses price support, if I'm in this one, I just don't want to lose the key price support level right here. So we went down and tested it beautifully at about 25.30, 25.40, bouncing off. Can we get back through that 20-day moving average? I don't know. I'm a little bit more bullish the market now in the short term, so I'm going to stick with the aggressive stocks until the market tells me to do something else.
All right. Let's see the next one up, GMLP. And this is Golar Partners, Oil and Equipment Services.
Yeah, look at the group. Really weak. Yes, we've seen some strengthening off of the December low, but on a relative basis, look at the group relative to the S&P 500. It just can't put in a new relative high. It just keeps going lower. Here's a lower relative high. Then you got a lower relative low, and now you got a new lower relative high, and it's drifting. I don't see enough yet to get interested in the group. So I have to have one of the stocks that really is just going crazy in terms of relative strength and absolute strength. Relative strength is good. I wouldn't exactly say it's got great absolute strength. It hasn't taken out the November high, but it's probably one of the better stocks within the group. I would just say let's wait, and I'm just going to draw one line on this chart, and that's going to be at relative. I'd like to see on a relative basis this stock take out that relative level versus the S&P 500, and then to see the group take out that level before I'd even consider putting my money in here. So not a big fan. I think there are just other areas of the market I like better.
All right. Let's see, Trex, Trex.
Okay, Trex. Yeah, nice action here. Nice volume coming in. The group is broken out above its reaction high at the beginning of December, so that's good. The stock is strengthening against its peers, and its peers are stocks strengthening versus the S&P, and its peers are strengthening versus the S&P. Now, see this double top? That's what I like. I like the fact that we were able to come back up and take that out. So it's beginning to show more relative strength within the group. So I like that. And obviously the stock holding on to its 20-day, breaking out. It's just overbought. I mean, the stock's gone up from 65, 66 to 78 in about 2 or 3 weeks. So it's one that I'd like to see a pullback to. The rising 20-day moving average along with price support, the two almost intersect with one another down the low 70s. So this is a stock that I like. I just don't want to chase it. Lower 70s would be better on a pullback.
All right, let's see. And the last one, they didn't actually give a symbol, but I thought it might be interesting to look at. Somebody asked for, what do we think of the home construction, home builders right now? So Dow Jones, US, HB.
Yeah, I like it. I love this breakout. I've been talking about the home builders now for a while. I thought they bottomed back in October on a not just on a absolute basis, but I think also on a relative basis. I think we're beginning to see a little bit of relative strength here. I think the one, and I'm going to pull this up. What is the name of it? It's MTH, Meritage. Yeah, Meritage is one that I really like. So here was the gap up with earnings. It pulls back. And I'm going to show you this on a relative chart so we also can look at the home builder group, which was the question. But here's MTH pulling back. Look at the price, the breakout. Price support just above 42. That's where we went back to before we started strengthening again today. We're getting this breakout, the absolute breakout, and you can see MTH is one of the better stocks within the home building group. And home builders now have been moving up off of that. There's that relative low that I talked about. So we're stair-stepping and putting in higher highs, higher lows. Now, if we were to go back down and lose, I'm going to go ahead and use this one as the final annotation. But if we were to go back and lose the relative support in the group versus the S&P 500, like right about there, that would make me a little nervous. We have a triple bottom, and now we're moving back up again. I could draw another line here, but a really nice relative strength line on MTH versus the S&P. And, of course, the breakout on MTH. Might as well put that one in here too. Nice triple top breakout. We're coming back down testing that. So I would look for some relative outperformance coming forward now with MTH as we move up. I eventually see a breakout on MTH, and I really like this breakout on the index itself here. So overall, I think home builders, although probably still well on the left side of that line that I was showing you on the relative charts, the RRG. I think this is a group that's really strengthening and one I'd keep an eye on in 2019.
Okay. And there we are. There are the symbols that we did just go over in the 10 and 10. I'll have those up in the Market Watchers Live chart list after the show. Just go ahead and click on the articles or blogs tab. click on the Market Watchers Live blog, and the link to all of these charts is right there at the top. All right, time for our final market update. See what's been going on in the market. All right, here we go. Well, as you can see, definitely a better day than what we had yesterday. Looks like, yesterday was mostly sideways and just came off a little bit of the highs. Like you can see that on the Dow Jones from yesterday. But today, big gap up and continuing higher. Looks like we may have found our intraday high, at least for the moment, on all of these large cap indexes. NASDAQ actually starting to pull back slightly from that all-time high. That's the S&P 400 still looking pretty good, up over 17 points. Russell 2000 also seems to have hit its intraday high. It's currently up a little over 1%. TSX having a good day, as are our markets, with a gap up and actually continuing higher right now. We can see Treasury yields are up again. We're looking at 2.686% currently reading, and the VIX is lower today. We're reading at 1529 currently, but we were down all the way just about to 15. UUP is down for the day, been making its way down pretty much all day. Gold, interesting little look here. We started up higher and pulled back. It looks like a double bottom, of course, coming off of a rise, so it's not a textbook pattern, but really interesting movement considering you can see the dollar has pretty much been trending lower all day long. USO, big gap up, but pulling back, currently reading at 1125. And TLT, as you can see, had quite the slide this morning, but looks like it might have found that intraday low and has moved up a little bit to take back some of those losses. But TLT is currently at 121.37. And that's all I have for my portion of the final market update. I'm going to pass it to you, Tom, and get ready for that sentiment.
Okay, in my blog article this morning, I just wanted to point out I had written up a little bit about the hotels group. And of course, this is another area of consumer discretionary. But the group overall has been weak. But I'm watching the 20-week moving average to see if we can break back up above that. Of course, if you click on the chart, you can get the live version. And so right now it is trying to get back up through that 20-week moving average. Another thing to keep in mind with this group is here is your seasonality for the hotel group, and check out the February, March, April, and May period. As we go into spring, hotels tend to do extremely well. And you look across here, just these 4 months, you've got probably somewhere around 12%, maybe just under 12% average return for these 4 months. March and April combined, almost 10% just in those 2 months on average over the last 20 years. So just something to keep in mind. You've got a group that's trying to make a breakout on the 20-week EMA. At the same time, we're moving into a seasonal period where the group tends to be very strong. And I'm going to turn it back to you for your...
Okay, yes, time for that sentiment report. All right, let's get to it. So today's sentiment report is a day late, but certainly not a dollar short, as they say. All right, so here we go. We've got the sentiment update for February 11th. Right now, what it will look at are the 10-day moving average of the put-call ratio, American Association of Individual Investors poll, AAII. We have the National Association of Active Investment Managers, so we get to see where the big money, how exposed they are. And then we're going to look at the RIDEX ratio, a decision point indicator I think you'll like if you haven't seen it before. Wall Street Sentiment Survey, this is what market timers take on Fridays. We're going to see what they think about where the market's going to go this week. And then we'll look at the VIX and the gold sentiment. So lots to cover. So I'm going to go ahead and let's just get right on to it. All right, so our first one is going to be the put-call ratio. Let me get this nice and big for us here. All right. Okay, so first of all, I did invert the scale, so it's called a put-call ratio, but I inverted it so that I could see oversold and overbought. Because to me, if you've got a lower number, that means people are more bullish, and sentiment is contrarian, so that would be considered an overbought reading if you have a very small reading. And of course, vice versa, oversold if you have a lot of the bearish reading. So that's why I do flip it. Honestly, on this chart, I'm not seeing a whole lot of difference from what we saw last week. You've got mostly sideways action here on these indicators. They're near the top, for all of the week, really. But, what we look for is when these turn down. The put call ratios. We look for when they turn down, and right now they're moving mostly sideways. So I thought they were topping last week, which is what I was calling out last week as far as the top, and that would be bearish for the market. But honestly, we haven't quite topped yet. I think we still could, and again, that would be as well bearish for the market. I don't pay quite as much attention to the OEX put call ratio. It did pull way back because usually it's used as a hedge. So a lot of times you're going to see almost exactly opposite action. For example, you can see these lows here on the CBOE and OE and the CBOE and equity put call ratios, but then look at where the OEX one was near its top. So this one, you don't really need to invert the scale so much. But what I would be looking at is the fact that, yes, we're seeing as far as the OEX ratio is concerned, it's getting very high readings. We're kind of flat here for the rest. So, overall, I would say we're looking at mostly neutral here, but still bearish in that we haven't turned down, but we're certainly in an area where we've seen that happen. All right, the AAI investors poll. Again, remember, sentiment is contrarian. So if everybody is bullish, that means that we should look for downside. Right now, what I noticed is obviously we're leaning far more bullish than we have in the past, and much fewer bears going into this week. Notice that the ratio is almost near 2. We're at 1.75. That's very high. You can see that just by looking at the readings here that are over 2. There aren't usually that many. And usually they tend to come at tops for the market. So for example, you can see back here, we had a little bit of a move to the upside, but then ended up moving down because when people, again, are really bullish, that's generally when you need to start looking for that market turnaround to the downside. So at this point, I'm reading these as bearish for the market. All right, name exposure. So where are the active investment managers putting their money? How exposed are they to the market? Well, currently the reading is just over 80 at 83.39. I'm looking at as quite high as far as exposure goes. And I say that because I look at where we were before this decline started in October. And as you can see, from then on, we have not even gotten to this level. And, we've had some very low readings, obviously, back down here. So to me, I look at these as elevated readings, especially for this past quarter. And so high exposure means that money managers are feeling more bullish. And again, you look for reversals when everybody is quite bullish. So overall, I would have to say when you look at the AAII and you look at name, a lot of bullish sentiment, and I think that would be bearish for the market. All right, Wall Street sentiment survey. Going into this week, everybody on Friday afternoon after the market closes, or evening, depending on where you're at, we turn in our, whether we think the market's going to be higher or lower by the end of the following week. And as you can see, pretty much even here, a little bit more on the bearish side. The one thing that I would note is that if you add these together, of course, we're looking at about, 84%. And so that leaves only 16% in neutral. So I thought that was rather interesting, because when you look at the confusion level is what I consider neutral is, confused. I really don't know which way it's going to go. We're seeing less confusion and a little bit more determination maybe on the bearish side. But overall, when you look at the bull bear ratio, it's almost at 1. So I think we can read into this the fact that actually this isn't the right date. I just noticed that. I must not have saved it. So we will go back here because I don't know that it changed much. No, it did not. Same idea. So At this point, I would read them as neutral, but the fact that we're seeing less neutral readings, as far as the readings go, I would say that there's less confusion and a little bit more, force behind these bearish readings back here being more elevated. So as far as market timers go, we tend to be kind of on the right side of the market when it comes to sentiment. But if we're all pretty much on the same side, a lot of times that doesn't work out so well. But you can see previously, like looking back here, we came in as very bullish for the following week, and we did get the upside. So a lot of times the timers can be right. But then at the same time, when you look back here from the end of November, everybody was very bullish going in. We did get that rise, actually, so that's not a very good example. But over here, you can see that, well, no, it is a good example, because if you have a lot of bullish readings, you should expect some downside. And what ended up happening was we did get that upside. We got the gap and then the move to the upside after that. So that's not typical usually, but I think when you get really high readings, and you can see it back here in January, that you can kind of follow along, that the market timers do tend to be on the right side of the market, when it comes to the highly bullish readings. Alrighty, spinning beach ball of death. Let's try this. That will make it better, I think. Yes, now bigger. Sorry about that. Okay, next one up. We will look at RIDEX ratio. And we definitely love this one. This is a decision point indicator. And what we did is, years and years ago, there was a company called RIDEX that had a group of funds, the same amount of bear funds, same as the bull funds, and then they had the money market funds. Guggenheim now uses these. The symbols are all pretty much the same. So you can still gather this information, but at the end of the day, RIDEX, Guggenheim now, gives us the amount of assets that are in the funds. So what we do is we tally up all the assets in the bear funds, all the assets in the bull funds, as well as the money market funds, and then see where those readings are going. And in fact, right now, what we can see is that money is coming out. And again, money where the mouth is. This is not a survey. This is telling you what money is actually doing. So that's one of the reasons we really like to have this sentiment indicator. So you can see money leaving bear funds, money leaving money market funds. And where are they going? Into equities. Slightly. We're not getting a huge move to that upside on the equities, but the fact is we're seeing money leaving the bearish funds and the money market funds. And what does that mean? People are feeling more bullish, and they're starting to invest more into the equities. And generally, like I said, sentiment being contrarian, we should be looking for some downside off of this, because people are starting to feel more bullish. Now, I would look for maybe more extreme readings here. But, at this point, I still think you can read the fact just to see those bear funds and those cash funds moving lower, I think really gives us the information that things are a little bit more bullish as far as where the money is going. All right, let's switch gears a little bit, and we'll look at gold sentiment. And how do we measure our gold sentiment? Well, what we do is we look at the Sprott Physical Gold Trust, and we look at what it's trading at. It's a closed-end fund, so it only has so much as far as its metals and all of that, and it actually has a value to it. And then when people will buy into this fund, they buy the fund, it'll sometimes be at a discount depending on what the actual metals are versus what it's being bought at. So we look at the discounts and or the premiums. And if you get very high discount levels, that means you're looking at a lot of bearish sentiment as far as gold. And typically that's when you start to look for some upside movement. And you can see back here in November, we had that and came up off of that. We had some fairly extreme discount readings back here in December at the end. And again, that really comes in right at those lows on gold. So we're seeing the pullback honestly, in the sentiment, but we're still getting a lot of we're still getting high discounts overall. I mean, you can see where that level is based on the reading, and you can see that when we come back from that, past that June, July, these are elevated. That's elevated as far as the discount level, and so I would still be looking at this as somewhat bullish for gold. We got the pullback, and you can see we're starting to make the bounce off of that support. So I think that looks pretty good. But there are a few things here that do bother me a bit about gold, and that would be these PMO tops that are going lower, yet we're seeing higher tops by a large scale here. But we could have gotten what we needed out of it with that pullback and then the move to the upside. All right, last one will be the VIX. And I use this as a very short-term sentiment indicator. I find that when we put the Bollinger Bands around it and then I invert it, again, because I want lower readings to be considered overbought, because if people are very bullish, that is bearish for the market. And so that's why I invert the VIX. That way I can get that overbought, oversold feeling. And, we had that puncture. Carl and I were talking about on Friday how we kept puncturing the top of these Bollinger Bands, but we were not getting the pullback we kept waiting for. And now, we finally did get that. Now we're starting to rise back up, though, toward the top of that upper Bollinger Band. And, I find it interesting that we are staying above the average here. We have been since, well, gosh, early 2019. So most of this time, we've had some fairly low VIX readings, considering, when you look at what we had previously. So the fact that we're hanging out above that moving average, I find that interesting. I'm not really sure how to read that, except that, if you've got the lower readings, people are feeling a little bit more comfortable and a little bit more bullish. And again, in the very short term, that can be a negative thing. That can be bearish. So I'm looking at that as a bearish issue at this point. So, all right. So that completes the sentiment update. Let me go ahead. I'm going to share some summary slides for you. All righty. And there we go. So first of all, remember 10-day moving average, neutral to bearish for the market. And we can see the AAII bearish for the market. We've got NAME is bearish for the market. And Wall Street Sentiment Survey, that one's somewhat bullish for the market just because we have the market timers leaning a bit more on the bearish side. And then as you can see, right-X ratio bearish because we are seeing the movement out of the bear funds and money markets. And that, of course, tells us that people are feeling more bullish, and that's a problem when it comes to sentiment. VIX, near term, I'm saying bearish to neutral. We are near the top of that upper Bollinger Band. And then as far as gold goes, discounts are lowering, but I'm only going neutral as far as the sentiment goes for gold. So that's all I have for the sentiment update for this week. And wow, time to close the show, like in just moments.
Yeah, we're getting close. It's great to be back, though, on the air, and hopefully the weather in Seattle continues to improve so we can continue to bring you the shows.
Mm-hmm.
But yeah, it was an interesting day today. I think the overall market continues to be pretty resilient. I mean, we got the Dow right now currently at the high of the day up 356 points, NASDAQ up almost 100, S&P up 35, and Russell 2000 up more than 1%. It's up 16 points. So all in all, pretty good day.
Yes.
All right. Well, let's go ahead and wrap up. Want to thank everybody for being with us today. Please remember to complete the survey as you exit. Again, I'd like to hear about that. Break it down. See what you think of that segment. I really enjoy doing it. Hopefully you all do. You like hearing it. But your survey is located below the video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everyone. We'll see you back here tomorrow. Happy trading.